You are now tuned into the Money Level Show.
Hey everyone, welcome back to the Money Level Show, where we think, act, and prosper. You all are experiencing the pain with me. My gear has been rerouted on the plane, but we are live at the Rule Symposium and we still make it work. All right, so we got Nolan Watson with us of Sandstorm Gold. How you doing?
I'm doing good. Thanks for having me.
It's always good to be able to access and talk to people that run the companies that you invest in. So I've been in Sandstorm Gold for a while. It's in my kids' brokerages, accounts, and everything. So I've been following Sandstorm for at least 3 years now.
I appreciate that, and I promise to do my best to make good on that.
Yeah, for sure. So it's always good just to be able to connect and everything. So Sandstorm has been flowing with a lot of cash. I mean, and this is like the royalty and streaming model. You all, if you haven't watched my previous interview with Kim of Sandstorm, we interviewed her back in New Orleans, and we talked about like the cash and the capital allocation. Where's that cash going? Because the cash can go to reinvesting in other new projects, or paying off debt, or share buybacks, or dividends, right? And so, what is the capital allocation looking like for Sandstorm right now?
Yeah, it's an interesting question. That's basically become my job is to just worry about capital allocation. As we grew Sandstorm over many years, one of the challenges we had is when you're trying to grow a company and you're starting off, you've got to raise capital to build the company. We've done that, and we've raised the capital, and now we own streams and royalties on assets all around the world. They're cash flowing in, and that's the perfect question, because that's my job. So we've got enormous amounts of cash flow coming in, $100 to $150 million a year, growing to about $250 million a year in the US. And so right now, the primary capital allocation is debt repayment. So we made over $1 billion worth of acquisitions 2 years ago. And to do that, we took on about $640 million of debt at the peak. Mm-hmm. I hate debt. Mm-hmm. Yeah. And so we've been paying that down aggressively. We've got our debt down to $388 million as of this morning while wow. I'm talking to you here. So from 640 to 388, and it's coming down fast. And the goal is to get that to zero. And so the vast majority of our capital is just getting that to zero. We're recharging our balance sheet to get ready for our next leg of growth. I don't like issuing shares, and I don't want to ever have to issue shares again if I can do that. And so what we're trying to do is take the cash flow that's coming in and recharge. It's on a revolving facility, so we're recharging our revolver. And as we pay it down, more room opens up as to what we can draw on it for future acquisitions. And so we're doing that. We're also, in terms of capital allocation, we're buying back shares now. Mm-hmm. So we're now in a phase of our company's evolution where we can shrink our share structure. And every year there will be fewer shares outstanding. What that means for investors, myself being one of them, 90% of my net worth is in Sandstorm. And that allows, every time we buy back shares, we then cancel those shares. We buy back those shares, and then we cancel those shares, so that everyone who owns Sandstorm, they own a higher percentage of Sandstorm after that. Mm-hmm. And so what we're doing is we're paying down debt, we're buying back our own shares, and then we pay a small dividend. And that's really what the capital allocation is right now. We do have a corporate development team. We are looking at potential new future deals. And with those transactions, we're being very, very picky because, like I said, we want to prioritize debt reduction. Mm-hmm. We want to buy back some shares. We want to pay our dividend. So it's a very high hurdle. It has to be a really special transaction for us to want to buy anything right now.
Mm-hmm. Yeah, that's really good. So, and even for people that are watching this, right? People think about, okay, how much does the CEO own of the company? And so when a CEO doesn't own a lot of shares in the company, then that's like a red flag for many investors. So for you to say 90% of your net worth is in Sandstorm, that shows you got a lot of investment. You got a lot of skin in the game.
I mean, I started the company many years ago and put just about everything I had into it at that time, and have been growing it ever since. About 2 years ago, I felt so strongly about the quality of the company and the quality of the portfolio that we built, and really disliked our share price and thought it was a great opportunity, that I actually went and borrowed money mm-hmm. and bought more Sandstorm shares. I've bought about $3 million worth of Sandstorm shares over the last couple of years myself. So I've gone from 80% of my net worth to 90, and I do believe in it.
Yeah, that's good. So there's like a debate I've seen in terms of like with investors, dividends versus share buyback. So obviously some people may want to get like a passive income yield, and then they may look at Sandstorm as like, okay, well, dividend isn't significantly high, but share buybacks, has a lot of benefit to it as well. I mean, because then you're owning more percentage of the company, the stock price rises and everything. So what was like the decision more towards share buybacks versus dividend increases?
Yeah, so whenever you're answering the question about capital allocation, what you have to fundamentally ask yourself is, what is the implicit rate of return I'm getting by allocating capital that way? So if it's a new acquisition, it's what rate of return am I getting if I buy this thing? If it's debt reduction, what interest rate am I saving if I pay this debt down? If it's a share buyback, it's what do you think the implicit rate of return is by buying your own shares? And then for a dividend, that's what's left over. It's if none of those things met my hurdle rate, then I should be paying it out as a dividend. And we at Sandstorm, we see really good acquisition opportunities in front of us. Interest rates are pretty high right now, so debt reduction looks very, very attractive. But with our share price where it is and the amazing portfolio that we built, we're very, very confident that we're getting a very high rate of return by buying back our own shares. And so that's one of the reasons that we're doing it now. I believe that there is an intangible issue outside just rate of return when you're looking at debt reduction, because with debt reduction, you are not just saving your interest rate, you're also decreasing your overall risk. And so if I can get that rate of return and decrease the risk of the company, that's my priority. And then my second priority is share repurchases. So I personally, if we had zero debt today, we would be buying back an enormous amount of shares in the market, taking our share flow.
Yeah, that makes total sense. And I think it also gives me a new way of thinking about it, because sometimes as retail investors, we think about, what can we get from it? Whether that be like a higher dividend or increase in price from share buybacks. But you have to look at when you buy shares of a company, you own part of that company. And so if the company is just, saddled with debt, and it's managed poorly, right? Then that can burn you in the end. So it's good, like just to even have that holistic mindset about Sandstorm as a whole, because it's like, you're owner in the company.
Yeah, absolutely. If you think about, a guy like Larry Ellison is one of the richest people in the entire world. He started and founded Oracle, and he owned a certain amount of Oracle when he started, and it was worth a lot. But then he started buying back his own shares, and I think he's bought back half the company. Like the share buybacks, he's bought back half the company, so he now owns twice as much of the company as he did when he started it back up. And I'm hoping that we can get our debt reduction down, and then increase the share buybacks. And then if our share price goes to a really high number, which I would love that would be fantastic. If our share price goes really, really high, and then the share buybacks doesn't make as much sense, that's fine. We'll go allocate the capital to acquisitions or dividends.
Yeah, that's really good. So you're on the World Gold Council.
I am, yes.
Right? And so I had met with Joe earlier. Joe's here, and we talked about gold demand and such. And so when you're looking at, okay, we have China, central banks buying gold, and we also have people of China buying gold. What are you seeing there in terms of like demand and how demand is going to look going out?
Yeah, I'm super bullish on gold. I think that we have just hit an inflection point, and we've seen it as the gold prices come up. This is the first time in this section of the macroeconomic cycle. When interest rates go up like they did, gold is supposed to go down. Interest rates went up and gold went up.
Yeah.
Why did it do that? It did that because the rest of the world that wants to get off the US dollar, and there's this huge de-dollarization push, and that push is going to take decades and decades and decades. It's going to last for a very long period of time. And the Chinese and the Indian governments and their citizens now have a chokehold on the price of gold, and they're going to keep buying it, and the price is going to keep going up over the long term. It used to be that the U.S. institutional investor and net worth in the U.S. determined the price of gold with some manipulation of central banks in there. And it has now moved to the rest of the world is determining the price of gold, and they want off the US dollar. The gold price has been pushed higher, and I think it's going to keep pushing higher.
Yeah, that's good. And so with Sandstorm, you invest in companies and you pretty much finance them to get going, or you finance specific projects. So when investors are looking at like inflation cost on mines, or they're looking at okay, well, some of the mining companies aren't doing really well and such. And so what kind of things do you take in terms of being like a royalty and streaming company? I mean, you get the gold at a cheaper per ounce rate, right? And so I mean, that it just seems like just so beneficial for people to eliminate the risk, that comes with trying to pick individual mining stocks. Because if the price of gold goes higher, then it's usually expected that the mining stocks are going to go higher. And so it's kind of interesting. Like, people are trying to navigate that right now.
Well, exactly. I think if you ask investors fundamentally, why are you investing in this mining company? It's typically either A, because I believe that metal price is going up. In the case of gold, I think gold price is going to be going up. Or I think that there's a lot more to the project than the average investor understands, and there's going to be more exploration upside, and I want to participate in the upside. And if you get both right, the commodity price goes up and there's more, then you can make really outsized returns. The problem with investing in mining companies is that there's inherent risks in mining. If there's a flood, if there's a fire, if there's a political issue and the mine shuts down, as a mining company, you still have the costs to keep that on care and maintenance, and then the cost of restarting the things, and you lose enormous amounts of money during the period where you have no revenue. And so mining companies lose huge amounts of money, and then they make money, and then they lose huge amounts of money, and then they make money. Whereas at a streaming royalty company, we make money as long as they're producing. If they have revenue, they have to give us our percentage. Our costs, if they shut down, is zero. We don't lose money. You can't lose money on a stream or a royalty that way. And so what we do is we get the best parts of mining. We get the exploration upside, we get the price upside, and we don't have many of the downsides that the mining companies do. And then we have the added benefit of diversification. If you're investing in a one asset mining company, if something goes wrong with that mine, you're in trouble. You're going to lose a lot of money. If you have 10 mines, that's better. At Sandstorm, we have about 240 streams and royalties. So we're getting the upsides that you would get. You get all of the upside, and you get the downside mitigated, and you get to diversify. And so that's one of the reasons why I've been able to put 90% of my net worth in Sandstorm and sleep at night and not be worried, is because I know if something goes wrong at one mine, that's fine. We have all these other assets, and it might be a bad quarter for that mine, but it's still just going to be okay overall. And that's why we built the company the way we built it.
Yeah. And looking historically with royalty and streamers, they've outperformed miners significantly. I mean, even after 2011, when the price of gold dropped significantly, royalty and streamers outperformed. And so, looking at that, was that an attractive point for you, where it's okay, when you wanted to start Sandstorm, were you thinking okay, let me start a streaming and royalty company, or were you thinking about going into mining first? What kind of brought you to that decision?
Well, I've spent my entire career in mining. I was the chief financial officer of a company called Wheaton Precious Metals. And so I fell in love with the business model there. It's a fantastic business model. And so when I decided to start the company, I started up a company in what I knew and the business model that I loved. And that's why I think Sandstorm is what it is, and we're going to keep growing it. Now, having said that, when you're starting up, getting from zero to $1 billion market cap is very, very hard to do, because you're requiring on the capital markets to give you capital to grow, and you're having to raise equity, and that is dilutive. And it's been very frustrating for me to, getting to the stage that we're at. I feel amazing about where we're at now, though, because we don't need the capital markets anymore to raise equity. We've built the portfolio. We have all the streams and royalties. We have the diversification. We have the significant cash flow. We're going to use that cash flow to grow. And I'm much more excited about this next phase of Sandstorm's life.
That's good. Well, Nolan, appreciate you for coming on. Where can people find more about Sandstorm and just, the work that you all are doing?
Yeah, sandstormgold.com or call me.
Yeah. All right, he's accessible, y'all. You can give him a call. You can grill him if you have any questions. But this isn't financial advice. I'm a shareholder of Sandstorm, so definitely appreciate this time.
Thank you. Appreciate it.
Yeah.